Have you ever stopped to think about the true intentions of the credit card industry? Or are you just blindly swiping your way through life, accumulating debt and interest without a second thought? The truth is, most of us are so caught up in the convenience and rewards that come with credit cards that we rarely, if ever, take the time to consider the motivations of the banks that issue them. But what if I told you that the credit card industry is built on a foundation of psychological manipulation, designed to keep you in debt and generate massive profits for the banks? A study conducted by Dr. Dan Ariely, a renowned behavioral economist from Duke University, found that when people use credit cards, they tend to spend up to 30% more than they would with cash, simply because the pain of paying is less intense. This phenomenon is known as the pain of paying, and it's a key factor in the credit card industry's ability to generate massive profits. But that's not all. The credit card industry is also built on a system of complex fees and interest rates that are designed to be confusing and difficult to navigate. A study published in the Journal of Consumer Research by Dr. Ronald Paul Hill, a marketing professor at the University of South Florida, found that the complexity of credit card agreements is a major contributor to consumer debt, as people often struggle to understand the terms and conditions of their cards. And it's not just the fees and interest rates that are the problem. It's also the way that credit card companies use rewards and benefits to lure us into debt. A study by Dr. Scott Rick, a marketing professor at the University of Michigan, found that people who use credit cards with rewards programs tend to accumulate more debt than those who use cards without rewards, simply because the rewards create a false sense of value and encourage us to spend more. So, the next time you're tempted to swipe your credit card, remember that you're not just making a purchase. You're also participating in a complex game of psychological manipulation designed to keep you in debt and generate profits for the banks. Now, I know what you're thinking. What's the big deal? I can just pay off my credit card balance in full each month and avoid the interest rates and fees. And that's true. If you're one of the disciplined few who can resist the temptation to overspend and pay off your balance in full each month, then credit cards can be a useful tool. But the reality is that most people don't pay off their balances in full and instead end up accumulating debt and paying massive interest rates. In fact, according to a report by the Federal Reserve, the average American household has over $4,000 in credit card debt and pays over $1,000 in interest each year. That's a staggering amount of money, and it's a major contributor to the financial stress and anxiety that so many people experience. So, how do credit card companies get away with this? Well, the answer is that they use a combination of clever marketing and complex financial language to confuse and intimidate us. They know that most people don't have the time or expertise to fully understand the terms and conditions of their credit card agreements, so they use that to their advantage. They bury the important details in fine print and use misleading language to make their cards sound more attractive than they really are. And it's not just the credit card companies themselves. It's also the banks that issue the cards and the regulators who are supposed to be overseeing the industry. Everyone is complicit in this game of deception, and it's up to us as consumers to educate ourselves and take action to protect our financial interests. But here's the thing, it's not all doom and gloom. There are steps you can take to protect yourself from the credit card industry's tricks and traps, and to use credit cards in a way that benefits you, rather than the banks. For example, you can start by reading the fine print and understanding the terms and conditions of your credit card agreement. You can also look for cards with simple, transparent terms, and avoid cards with complex fees and interest rates. And you can use tools like budgeting apps and spreadsheets to track your spending and stay on top of your finances. By taking control of your financial education and being mindful of the credit card industry's tactics, you can use credit cards in a way that works for you, rather than against you. And that's where the concept of credit card literacy comes in. The idea that consumers need to be educated and informed about the credit card industry in order to make smart decisions about their financial lives. This concept is rooted in research by Dr. Lauren Willis, a law professor at Loyola Law School, who has written extensively on the topic of consumer financial literacy. According to Dr. Willis, credit card literacy is essential for consumers to navigate the complex world of credit cards and to avoid the traps and pitfalls that can lead to debt and financial stress. By understanding how credit cards work and how the industry uses psychological manipulation to keep us in debt, we can take the first step towards reclaiming our financial power and building a more secure financial future. So, let's take a closer look at some of the specific tactics that credit card companies use to manipulate us into debt. For example, have you ever noticed how credit card companies often offer 0% introductory interest rates, only to jack up the rates after the introductory period is over? This is a classic example of a psychological manipulation tactic, designed to get us to sign up for a card and start spending, without fully considering the long-term consequences. And it's not just the interest rates. Credit card companies also use rewards and benefits to lure us into debt by creating a false sense of value and encouraging us to spend more than we would otherwise. But what's even more disturbing is that credit card companies often use our own psychological biases against us to get us to spend more and accumulate more debt. For example, they might use the anchoring effect to make a particular purchase seem more reasonable by comparing it to a more expensive alternative. Or they might use the sunk cost fallacy to get us to throw good money after bad by convincing us that we've already invested so much in a particular purchase that we might as well see it through to the end. These tactics are designed to be subtle and insidious, and they can be incredibly effective at manipulating us into debt. And that's where the concept of financial self-defense comes in. The idea that consumers need to be proactive and vigilant in protecting themselves from the credit card industry's tactics. This concept is rooted in research by Dr. John Lynch, a marketing professor at the University of Colorado, who has written extensively on the topic of consumer financial decision-making. According to Dr. Lynch, financial self-defense is essential for consumers to navigate the complex world of credit cards and to avoid the traps and pitfalls that can lead to debt and financial stress. By understanding how credit card companies use psychological manipulation to keep us in debt, and by taking steps to protect ourselves, we can take the first step towards reclaiming our financial power and building a more secure financial future. And that's exactly what we're going to explore in the second half of this video, as we dive deeper into the world of credit card manipulation and explore some strategies for fighting back. So, now that we've talked about how credit cards can be a trap, let's dive deeper into the psychology behind why we get hooked on them. Researcher Wendy DeWild, a psychologist at the University of California, found that the main reason people overspend on credit cards is because they're trying to fill an emotional void. It's not just about the rewards or the convenience. It's about how it makes us feel. We feel important, we feel successful, and we feel like we're treating ourselves. But the truth is, that feeling is short-lived, and the debt we accumulate can last for years. Another study by researcher Dan Ariely, a behavioral economist, found that when people use credit cards, they tend to spend more than they would with cash. This is because credit cards create a sense of detachment from our money. We don't feel the pain of parting with our cash, so we're more likely to make impulse purchases. And that's exactly what the banks want. They want us to spend more, so they can make more money in interest. But we can outsmart them by being aware of these psychological tactics. So, what can we do to break free from the credit card trap? First, we need to take a hard look at our spending habits. We need to track every single transaction, no matter how small, and see where our money is going. This will help us identify areas where we can cut back and make some changes. For example, I used to love buying coffee every morning on my way to work. It was a daily ritual that I thought was harmless. But when I started tracking my spending, I realized that I was spending over $500 a year on coffee. That's a lot of money that could be going towards something more important, like paying off debt or saving for an emergency fund. Second, we need to start using cash for discretionary spending. This will help us feel more connected to our money and make us think twice before making impulse purchases. For instance, my friend Sarah used to love shopping at the mall, but she found that when she started using cash, she was more mindful of her spending. She would take out a certain amount of cash, and when it was gone, she knew she had to stop shopping. It's a simple trick, but it can make a big difference. Third, we need to start paying off our debt as quickly as possible. This means making more than the minimum payment on our credit cards and considering a balance transfer or debt consolidation loan. For example, let's say you have a credit card with a balance of $2,000 and an interest rate of 18%. If you only make the minimum payment of $50 a month, it'll take you over 5 years to pay off the debt, and you'll end up paying over $3,000 in interest. But if you pay $100 a month, you'll pay off the debt in just 2 years and save over $1,000 in interest. Lastly, we need to start building an emergency fund. This will help us avoid going into debt when unexpected expenses come up. For example, my neighbor's car broke down recently, and he had to spend $1,000 to get it fixed. If he didn't have an emergency fund, he would have had to put it on his credit card and go further into debt. But because he had a cushion of savings, he was able to pay for the repairs without going into debt. It's amazing how these small changes can add up over time. By being more mindful of our spending, using cash, paying off debt, and building an emergency fund, we can break free from the credit card trap and start building wealth. It's not about depriving ourselves of things we want. It's about being intentional with our money and making conscious choices that align with our values. I've seen it happen in real life. When people start to take control of their finances, they start to feel more confident and in charge. They're no longer slaves to the credit card companies, and they're able to achieve their financial goals. For instance, my friend Emily was able to pay off $10,000 in credit card debt in just 1 year by following these steps. She's now debt-free and saving for a down payment on a house. It's not easy, and it's not always fun, but it's worth it. When we take control of our finances, we're not just improving our bank account, we're improving our lives. We're reducing stress, we're building security, and we're creating a brighter future for ourselves and our loved ones. So, the next time you're tempted to whip out your credit card, remember the truth about credit cards that banks don't want you to know. Remember that they're designed to keep you in debt, and that you have the power to break free. By being aware of the psychological tactics and taking control of your finances, you can start building wealth and achieving your financial goals. If this helped you think about money differently, subscribe. I post new finance insights every single day. And if you want to go even deeper, check the link in the description for the Total Money Makeover by Dave Ramsey. It changed how millions of people think and act.